buyers and sellers are supposed to be enemies, right? So why are they both happy? It's because they are looking from different angles and different perspectives. Lower rates are a win-win for both. The Bank of Canada has finally started cutting interest rates. It's the first rate cut in over 4 years. What a relief, like a rain after a long drought. The central bank finally cut rates, so it's finally time to buy houses, and people are rushing to list their homes for sale too. A tiny 0.25% cut, just a drizzle, is almost nothing for most people with heavy debts. It doesn't solve the root problem, but it's a crucial boost to market morale. It's like seeing a glimmer of light in a long tunnel. Is this the end of the tunnel or just a dim light in the middle? We'll see if there's another rate cut in July. Either way, I believe this news will positively impact June's sales figures, like a shot of adrenaline for buyers and sellers. But whether it can reverse last month's downward trend remains to be seen. You can tell from this cure-all chart that inflation rates over the past 6 months have been generally stable with a slight decline. Despite occasionally small shocks, some might say, I haven't noticed the prices going down. Everything's still going up. And you are not wrong. A lower inflation rate means prices are rising more slowly, but they are still rising. For example, a big chunk of $100 beef used to go up by $8 compared to last year. Now it's only going up by $3. But the price has never actually gone down. Only the speed of the increase has slowed. To make sure everyone completely understands what this really means, I especially pulled out a graph of the inflation rate over the past 100 years. You can see that in 100 years of history, there have been only 10 times when the rate was negative, and most of those times were very short. For example, in the past 30 years, the prices only went down briefly in May 2020 during the pandemic, 1 month only. The 2008 crisis, it was negative for almost about 3 months. Other than that, it's been up, and up. You can see that most of the negative periods were very short, and then it could skyrocket. The most obvious example is from September to December in 1944, where there was a brief negative growth of 1.1 to 2.2%, and then it went crazily skyrocketing all the way to 17.5% by February 1948. It's just crazy, simply crazy. The only time that had a long and steady deadline was the Great Depression in the 1930s, which lasted about 5 years. 5 whole years of economic sadness. It's almost 100 years since then. Isn't it time to repeat history now? Let's go back to our cure-all chart. You can see the unemployment rate is steadily rising, but from a historical perspective, it's within normal and controllable range. If inflation keeps going down, even if it's just a slight continuous drop, there's a pretty big chance we'll see interest rates drop again in the next few months. So, whether interest rates go down is really up to you, the bosses. If everyone keeps raising prices in a big way and fast way, the chances of continuous rate cuts get smaller and smaller. Of course, I know if others raise prices and your employees want higher wages, you are kind of stuck and no choices. And of course, the ongoing two wars and potential new wars brewing, new geopolitical conflicts are not great news for our hopes of rate cuts either. Hey everyone buying or selling houses, take a look at this average price trend chart from the past 47 years. Just imagine if you had a time machine to go back and start over. Have you figured out when you'd buy in and when you'd sell out? Dream for a while, but don't dream too long, or you won't want to wake up. Even though this average price trend chart doesn't really help much with real-life buying or selling decisions, it's still fun for those not buying or selling to watch from the sidelines and singing their own songs to relieve their worries. This interest rate cut has made both buyers and sellers happy. If rates go up, both buyers and sellers would be unhappy. The only ones who don't care are those without loans. No loans, no worries. Why are buyers happy? Because lower rates means less potential burden, so they can make a move. Why are sellers happy? Because lower rates heats up the market, making it easier to sell houses at higher prices. Buyers and sellers are supposed to be enemies, right? So why are they both happy? It's because they are looking from different angles and a different perspective. Lower rates are a win-win for both. So who loses? If nobody loses, why don't they just cut again and again? That's a very good question, actually. I almost stumped myself there. After thinking long and hard, I found the only answer: people don't buy any assets at all. Remember a few videos back when I said that according to history data, the housing market wouldn't last more than 4 months. Well, guess what? I nailed it again. The overall housing sales in the Greater Vancouver area have taken a nosedive. After wagging its tail for 4 months, it's finally done. Now, is it gone for good this time? Or is it just giving us a cheeky smile before coming back to life? With the latest news on interest rate cuts, there's a good chance it'll bounce back. Let's keep our eyes on the June data and see what happens. The total listing volume is getting more impressive by the way, with 4 straight months of going up and up and up. It's already hit a new high since the pandemic began, approaching the peak levels of 2019. It makes sense because sellers have been hoping for rate cuts in June, and now it's confirmed they were right. Of course, the consistently high interest rates almost played a big part to push sellers to sell. Selling at sky-high prices, stuffing all bags with money, grinning year to year as they cash out and leave behind the anxious buyers. The new owners then have to keep finding evidences to prove they aren't the final bag holder. The roles of buyers and sellers switch back and forth, constantly checking the price charts to make sure they made the right decision. It's true, a case of some rejoice while others worry. Listings are skyrocketing, trading volume is going down, and the inevitable result is the total pressure chart keeps heading down. This time, it's dropping a bit more than usual, just hitting the line right on the 20 mark. According to sports rules, stepping on the line means something, right? Anyway, this trend doesn't look good. Let's see if the interest rate cut in June can change this trend. We can't wait for the June data to come out and see. This month, single-family homes are rocking it. They are the only type of property with rising sales. These single-family homes are playing the long game, biding their time, while condos and townhouses are burning through all their moves. And now it's time for the endurance test. The performance of single-family homes is a little surprise to me, but according to the no more than 4 generations theory, it makes sense. The rise in single-family homes started back in February, like they were a bit behind the other types. So if they are still rocking it next month, that's when we'll know they are truly amazing. The pressure on single-family houses, it's definitely there, and it's continuing to drop. It's been trying so hard to leap over that 20 line, but now it looks like that's getting harder and harder. Buyers of single-family houses, should you laugh or should you laugh? But hey, if you are still paying rent every month, there's really nothing to hesitate about. If you are worried about being a sucker, just go for the cheapest option. The cheaper the better, then you'll feel at ease. Because based on the inflation trend for the past 100 years, the chances of prices dropping are very, very slim. Of course, if you are buying a luxury property, it's a different story. With all the ups and downs, the pricier the house, the harder it falls when it does, and rises even more fiercely when it rises. So it's not about trends, it's about how strong your two things are: your heart and your money. If you are not optimistic about the economic long term, then patiently wait for the big crash. Given the government's habit and speed of printing money, that day will come sooner or later, and it's speeding up. So, in this video, let's appreciate the speed at which the government prints money. M2 money supply has doubled in the past 10 years, especially since the pandemic. The speed is astonishing. If this pace continues, the big crash that many have predicted is just around the corner. The sales chart for apartments has finally dipped down. 1, 2, 3, 4. Still haven't broken the curse of the 4th generation. Though stubborn, though resilient, apartments remain our king of kings, with solid transaction volumes and acting as the driving force, truly the mainstream of future housing. Some may say the future is already here in big cities. Well, with apartments firmly established as the norm, I'm not entirely sure about that though. According to Canada's Statistics Agency, in 2021, British Columbia had a total of 2.04 million private dwellings, with 42.4% being detached houses and 10.9% being apartments of 5 floors or more. Based on this, the number of detached houses and apartments should be relatively equal right now. However, considering the current rate of demolishing detached houses and constructing apartments, the future where apartments dominate is quickly approaching. The pressure chart of the apartment was hesitating and lingering for 2 months, finally bowing down its noble height and heading straight towards the 20 line. Now, we are not sure if it'll break through or turn back. It all depends on whether the interest rate cut in June will be a strong enough shot in the arm. Here comes the highly anticipated star product, the townhouses. Just like a true star, even its downward turn is so confident and decisive. No hesitation at all, straight to the point. No beating around the bush. When it says down, it means down. No hesitation, truly executing that star quality. Let's take a look at the pressure chart again. Celebrities are indeed different. Even the pressure chart is straightforward for them. With just one stumble, they drop below 30th and head straight for 20. It seems like everyone is holding back their big moves. Whether it's buyers of standalone houses, apartments, or townhouses, they are all waiting for interest rates to drop. Alright, now that the interest rates have dropped, sellers are rallying, counting down 1, 2, 3, and they are out in force. Many listings, and now it's up to the buyers. Listings flood the market like the vast ocean, ready to brave the waves in June, just waiting for the buyers to get excited. We've gone through all sorts of charts and news, and this episode brings a mix of joy and concern. Are you feeling a bit chilled or excited personally? Some are happy, some are worried. That's the nature of crisis. They often hold opportunities within. The danger is apparent, but have you spotted the opportunity? Give me a big thumbs up first by clicking that like button. Then let's continue chatting. Just like whole flowers don't bloom forever, and people have their ups and downs. Investments and real estate work similarly. Things reach a peak and then turn around. Even with government interventions, everything still eventually follow the nature rules. The rule is simple. Prices can't keep rising or falling forever, and the same goes for interest rates. The ups and downs are where you make your money. No matter how much you earn, you can't take a cent with you when your time is up. Enjoy the present, experience every moment you have. do things without regrets. Drink moderately strong drinks, and give me your happy like button. Leave no regrets in this lifetime. As Mark 10 says, understanding the big principles is good, but liking and sharing this video is where the real value is.